Well, boys and girls, she's off to get the coffee because we're knackered. We're just back from holiday, jet lagged, tired, worn out, and needing another holiday to get over this holiday. But I've missed the charts, got loads of requests. So while I'm working through that, I thought I'd flick the camera on and show you something.
Matron, take them away.
So warm welcome to one and all. And as you just found out, I'm on holiday. Also love my coffee, because we all know Scruffy likes the coffee and he likes the charts. So what I'm going to do is I'm going to fire up the DAX. I haven't looked at the charts a great deal this week, so I'm actually looking at them flat. In other words, I'm going to look at them as if I haven't seen them at all, because in essence, I haven't. So let me flick it over. I'm going to look at the DAX, which is my go-to. I don't really need to go too much into anything else because I haven't worked out any strengths this week or anything like that. All I'm going to see is the chart movement. So let me show you. So this is the DAX. I'm going to get rid of all of my levels, just like so. And we're going to take it back to bare basics. Now, if I start out here on the daily, I can immediately see there's been a massive drive and it's pulling back on itself. Okay. The question is this a shallow pullback or is it going to be just a quick breather before it moves up? Now, what I'm interested in is that because it's showing indecision. It hasn't decided whether or not it's pushing up or pushing down. So I'll be keeping an eye on what's going on here, and it's at kind of the close of yesterday. Okay, let's take this out a little bit deeper though. It's still pushing up, and if we look at the weekly is actually showing you this is moving up. And where's it moving up to? Well, if I just drop a line in here just to kind of illustrate something, it's at the baseline of this. Okay, so that means it's either going to reject this section and come back on itself, or it's looking at this section here. Okay, which we'll put that there. Right, so it's actually at a very crucial point. If it breaks through, it's going to be playing in this range. Okay, so that's possibly for the next couple of weeks. It's a little bit too far in time, but it looks what the market's trying to achieve. All right, so we'll get rid of that. And what we're going to look at is what's going on from the daily down over. All right. Now, I don't want to spend too much time on it. So first thing I'm going to do is I'm going to put in some key fibs. Well, there's a drive from there to there. So where's it playing at? Well, shockity shock. Bouncing off a key fib line there, which is the 23. All right. So that's interesting. We'll get rid of that. So let's have a look, see what some daddy levels are. Now, I'm going to put these in just as solid black lines so I can tell the difference between what's what. And this will just quickly mark out the chart for me. Now, I will be putting a center line in and I will be changing it. Now, it started and closed pretty much in the same place, so that's all I need. Measuring tool. Pull that to the top. And it's trading in the lower half. Right, okay. I'm just going to change that purple because I just want to see it. Or better still, I'll change that fib to purple. Put that one back to black, and then I'll not get confused when I go further down the chart, boys and girls. Right. Okay. So what that's telling me is there's a fib line. that it's rejecting and pushing up. It's pushed into the close of yesterday, and it's hovering around here. It's already been to the middle point and come back down. Okay, so let's see what its sentiment is. And you do that by moving down the charts. All right, there's the drop. It's pushed up. There's a rejection come down. It's rejecting this as well. All right, so is there anything in amongst this? Well, let's get a fib on it. Find out. So that 38 lines up perfectly with that. So we have that 50 as a crucial point as well here. All right, that's interesting. But we've also got this, which is an overextended candle. So I really want to have a look at that as well. So if I pull that down onto there, pull this down onto the top of it, just so that I can zoom in. All right, so it's gone down. There's your 23, 38. If it's pushing up, it's going to come to this section here. So again, this becomes pivotal. And you can see in the cluster. Now, I know it looks a bit cluttered here. Let me widen this out a little bit. Whenever you look at a fib, the key area is the 50. All right. And you want to see it being touched of some description. So if that's coming up, there's a good chance it's coming there. But you've got that in the middle of it. So that becomes a stall point. All right. So I'm going to keep that in mind. Now I'm going to start pushing this out. All right. So I actually think this might be moving up over slightly. But let's just drill it into the hourly, which is where you'll get your main ideas from. So this is that move broken up. And as you can see, it was sustained. All right. So let's get a fib onto this. Just nice and simple. There's the top. There's the bottom. Clearly defined top. And if you're moving down, it's the first red. If you're moving up, it's the first green. The 23 is lining up correctly. That 38 is roughly where the 50% was of the original, of just the single exhaustion move. So this gives good entry exits, etc. All right. And we're on that entry roughly now. Thank you, my love. So I'm going to put these in blue just so I can see it. Just like so. Move these up. Now, there are ways you can put blocks into these where they become overextended blocks and imbalanced blocks. But what happens is you can actually put way too many on because they're everywhere in the chart. They're all over. Now, an imbalance is sort of there where that wick doesn't touch that wick. So you could essentially draw a box there. But then there's another one here. And as you come down, there's another one there. There's another one there. And the chart just gets filled up with them. Why? Because the further you go down the chart, the more of them they become. And they just end up being everywhere. And it's like most things that I say. The further down the chart you go, the more noisy it becomes. So these sort of imbalances, they just end up everywhere. So word to the wise, the higher up the chart, the better. All right. So you look at your daily, look at your 4 hour, look at your hourly, get your ideas. Then you work the lower time frames into that idea. So I've made this idea up and I've got points where I can get in, get out, etc. At the moment, we're looking roughly to the upper side. So again, right, huge drop, bingo. You can see it, it's clear as day, you know, sticks out. Let's have a look. Fib, right, broken the 23, broken that 50. Look where it stalls on the 50 all the time. It's now above it, pushing up. So this is a good area. I'm happy with that. Move this down and we can see it. Okay. Let's have a little look here. All right. So what I'd have a tendency to do is I'll be looking at this move here, looking to enter in and around this area here, but I will be looking for a push to the upper side. That's what I'm looking for. I like price to come to me. So whenever I trade, I won't be sort of just going click, in we go. I'll put pending orders in. And a good way of doing that is if I want to enter above this candle, which is reasonable, just drop a quick order in on that. Just like so. I'll just pull that down onto near the top of it. What that's representing is the price has to break the top of its current candle in order to trigger me in, and I've already got my settings in place. All right, so just get rid of that for now, just to clean this up. All right, and I can follow the price down till it's triggered in. Now, another way of doing it is, well, it is our old friend Fib. Oh, Fib comes into my play all the time because I just find it a good tool to work with. So I can go, right, okay, 23 is a good point, 38 is a good point, 50, 61, 76. I can use all of these as entry points if I so wish, you know, which is the key one, 50. Always will be. All right. But at the moment, I'm going to trail the price. Now, sometimes if you see, say the price is here, you can go, well, how do I get in? Well, an easy way is count 5 candles back on a 5-minute chart. So it'll be 1, 2, 3, 4, 5. And you sort of look where the cluster is and you look for a logical point. Well, that's it up and around here. So it has to break the highs in order to get in. Why? Because that shows strength, shows momentum. And that's what we're after. We're after momentum. So let me trade this out and then I'll come back to you at the end. Okay, guys, that's it. Job done. So what have we done? Well, we analysed this chart fully, recognised where it would go, which is to the upper side. Are we worried about these small pullbacks? No, because they give us opportunity to get us back into the market if we take profit, which is exactly what we did. I just followed it up from down this zone up to this zone and just methodically work my way. Simple stuff, guys. It genuinely is simple stuff. And it has generated 286 quid. Now that was done pretty safely. Stops are pulled in so that I can't lose any money. Certain elements are taken out so that I get sort of my profits banked, and then I can re-enter if I so choose. Easy, easy stuff. The thing with trading is, and I can't really stress this enough, you have to be just systematic. There is no magic pill out there. And one of the things I see all the time, certainly in forums, is the chase of the Holy Grail. You'll see somebody doing very well and you think, right, that's the way you have to go. No, it's not. Because we all look at the charts differently. What you need to look for is a framework. If you have a framework like what I show the guys in the Scruffy squad, and you'll see there's a number of them now doing incredibly well, they get the framework. They put in their own source because there's only one person knows you, and that's you. You know your pain, you know your pleasure sort of tropes that fire you up, but it all works off that single framework. And this framework is very simple. It's your levels. Doesn't matter how you put them in, but certain levels hold more weight than others. And that's why I'm going to start introducing sort of the trading clinic. I'll do them sort of every other Sunday night, or as many Sundays as I can, starting this weekend. And the idea of it is to give you a little snapshot in a watered way of how you can trade. But what I am going to say, and it's going to be controversial, and I know I'll get sort of kicked to the hilts for it, because it always happens. If you're chasing money, if you're chasing the magic system, and you think you're going to be rich trading, give up. And I genuinely mean that. Because too many times people come into this industry, and the reason why I'm being blunt is simply because of some of the messages I've had today. It's not happening. It takes money to make money. So if you haven't got a big account, you're not going to make big money. It's that simple. If you've only got a couple of £100, you're going to have to grind and build it up into something meaningful, which means you're working in the meantime. If you've got a decent size account, but you haven't got any experience, then you're going to lose that account. So again, it's common sense. You have to earn the right to trade. Trading is not easy, guys. And yes, once you've figured it out and you can understand how it works, it looks easy. I make it look easy. Some of the guys that I've helped over the years make it look easy. But the path to that point is not easy. In fact, you're walking on broken glass all the way till you get to the point where you're confident. And that journey can take you easily a year to 2 years. And if you have somebody come along and say, well, I've been trading 3 months or even a year and I'm super consistent, they're not. And I'll tell you for why. They may be lucky to catch a wave. And that wave, when you're in a bull market or a bear market where it's going in a single direction, it's like shooting fish in a barrel. It's easy. What they haven't experienced is market cycles and the way that a market will correct and the way a market will flush you out. They haven't been in the market long enough to see that. All they're seeing is quick succession success. When you've been in the markets a long time, you'll find that each time you have a success, it only lasts a certain length of time. Then market conditions change and it catches you on the hop. And when that happens, you then start to find out how good a trader you are, because you need to be able to recognize how to work both ways in the market know how to find out the strongest part of that market and go with it. You try and trade both ways, give it up. That's gambling. And you see anybody trading both ways, give it up. It's gambling. And it genuinely is. Because you'll get lucky sometimes and you think, yes, I'm brilliant. I've caught the bottom. I've caught the top. But there's going to be days where you don't. And they're the days that's going to catch you and hurt you badly. So just be careful, guys. Just be careful. Okay. So as always, I'm very easy found. You find all my contact details in the descriptions below. My WhatsApp's there if you need a direct message, or come down into the Telegram. That's free. And if you really want to see how I trade and understand how the markets genuinely work, come along to the Scruffy Squad. We'll make you so welcome. And not only is it shared learning, we're a good bunch of guys and we have a laugh every single day. So as always, guys, trade well, keep your risk managed, but above all, do what you love. Money will follow. See you all in the next one.